Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And yes, it is your daily financial news. Dion, got you a little note here. Congratulations to all of us for 26,000 subscribers. One rental at a time is a community. It is made up of many, many experts. I think eventually this channel will take off because we do things different. It takes a while in this crazy world for goodness to take hold. But one rental at a time, 7, 8, 9 millionaires, 3 topics each, helping you make some money, understand this crazy world. And sometimes we do impromptu meetings like yesterday with Dion and Greg to talk about the world that we are all in. So hopefully you appreciate it. If you like, subscribe, leave comments below, interact with me, tell your friends to join. You can count on the daily show, this one right here, every day going forward. So enjoy. So where should we start? Let's start with inflation. If you've been following my channel for any length of time, you know we talk about CPI and PPI and all of these other inflation metrics. Well, as I've said, every month there is one that the Federal Reserve keys on. It is their favorite metric, and it is called personal consumption expenditure, often referred to as PCE. Well, it came out this morning, and there's not a lick of good news in it. It came in at core, which is always X food, X gas. Don't tell me why they do that. Core came in at 5.2, highest in 39 years. Folks, we got to go back to April of 1983 before we had a higher PCE core reading. Not to be outdone, headline PCE, the one that you and I should worry about because it has food and, like energy. 6.1, highest reading since February of 1982. I will say it again, and thank goodness we're almost there. The Federal Reserve needs to take this opportunity when the market expects a quarter. They need to come out, show a backbone, get off their butt, and raise a half a point. Yes, Wall Street will throw a fit. Who freaking cares? Everyday Americans are starting to look at their wallets, their savings account, and go, what do I do? Do I spend this on the electricity bill, the phone bill, rent, gas? It's not a bunch of good options. And it is still getting worse. This is not good. Wall Street needs some pain. And yes, our 401ks or your IRAs or your individual stocks, I apologize, many of those will be included. But we've got to get through this so we can get and build a solid base and go forward. The good times will return. As Greg Dickerson said, bad times never last, good times never last. Let's just rip the Band-Aid off. I have zero confidence. Instead, they're going to rip off a Band-Aid one hair at an excruciating time. Not good. Go back to the top of my notes. What a wild ride in the stock market yesterday. Boy, if I was a stock market trader, I would have lost it yesterday. Crashes in the beginning and then ends up big. I know personally my emotions would have had me on the wrong side of those trades. Thank God real estate is so much slower moving. As expected, mortgage rates have dipped. Not a lot, but some. The 10-year is still under 2%, even with this crazy high PCE reading. Lots of earnings to talk about. Etsy beat top and bottom, but actually gave rough guidance and started to highlight tough year-on-year compares. Doesn't make me feel all warm and fuzzy, but there you go. Zscaler actually beat top and bottom, but we don't care. It is about guidance, and they gave weak guidance. Beyond Meat, basically wider expected loss on shrinking revenues. Yeah, that's not good. Coinbase beat top and bottom, record transactions, but gave, weak guidance. Looks like Carvana is out shopping, out spending some cash. They're going to be buying car auction services for $2.2 billion in an all-cash deal. Blackstone came out with an interesting article yesterday, which I thought was very interesting. Joseph Zidell says that the U.S. is the top safe haven for your money. This goes back to what I told you yesterday, or I suggested yesterday. The Federal Reserve needs to get off their butt and sell some treasuries. This is the time. If the window is open, it will not be open very long. Sell down your $9 trillion. Shoot, get it to 6-7 trillion. It will make us all feel better. And more importantly, it won't have that extra interest rate jump that if they wait, and let's be clear, they're going to be total losers and wait, but it's going to be painful later. Blackstone's telling us. Also, real estate. This is something that I have brought you many, many times, but now thankfully others are talking about it. Housing is not correlated to interest rates. It is correlated to wages. Sorry, I'm a little excited. I'm getting very irritated with people talking about interest rates without expectation of wages. The 50-year spreadsheet that I spent a day of my life building told us very clearly that it's not about interest rates. People say that if interest rates go up 1%, housing has to fall 10%. Well, folks, what if I told you I had examples of interest rates going up 300 basis points, 800 basis points, and prices still went up? It is because they are correlated to wages. And if you don't think we are in one of the largest and hopefully longest wage cycles, you are not paying attention. Housing, once again, not correlated to rates, correlated to wages. So, will wages go up in 2022? You tell me. That will give you your answer on housing. Russia's stock market, Russia's like 70 some odd percent based on some articles that I've read, not liking what's going on. Russia's stock market crashed 45% yesterday, ending the day down 33%. The ruble plunged to the lowest on record. People were protesting in the streets. Yeah, that's not good. You're going to go to jail. But I get it. But yeah, that's not good. They don't like that there. So again, this is something that is very much at the top, the dictator. The people appear, at least the majority, to not support what is going on. Burger King. Burger King is not going to raise the prices of your tenders, but they are going to lower it from 10 to 8. Hello, shrinkflation. Here are the top 10 cities and the bottom 3 cities for appreciation in 2021. What order do I want? We'll go top down. What the heck? Number 1, I bet you could guess, Phoenix, Arizona, 32.5%. I hope all of you owned several houses in Phoenix because you had a good year. Only to be close runner-up, Tampa, Florida. Lots of people investing in Florida, 29.4%, and Miami rounds out the top 3 at 27.3%. Again, Miami is now the most unaffordable real estate market. And if you know my channel, you know my story, I track affordability. The bottom 3, let's go to the third. We'll finish with the lowest. Chicago comes in with the bronze medal, 12.2%. Minneapolis, St. Paul, I guess, 11.4%. And the gold medal winner, Washington, D.C., at 10.5%. What I take from all of this, the worst real estate market last year was double digits. Take that, crash videos. If you are still watching people talk about crash videos because of price, you need to unsubscribe because they are costing you money. Not only did you lose out on 10% appreciation in the worst market, but you lost out on the lowest interest rates of our lifetime. They cost you money. Stop giving them a penny. That is on you. You want to see these creators stop creating crash videos? Hint, stop watching them. That's just me. Foot Locker came out with some very ugly numbers. Foot Locker gave very weak guidance. Their stock is going to get hammered. They're looking to cut $200 million in expenses. And if you want an accountant's secret decoder ring, what that means? Layoffs. Layoffs. And, oh, by the way, the company authorized a $1.2 billion stock buyback. That stuff irritates me. You just told me you're going to lay off a bunch of people and then you buy back stocks to make the executives rich. I hate stuff like that. That's just, you're better than that. Well, no, you're not. Anyways, I got some good news from Cinemark. Cinemark, if you don't know who they are, the big movie chain, they posted an unexpected profit. Yes, folks, we might actually be going back to the movies. People are going back. Spider-Man was a big win, and more coming. Dell Computers reported supply chain hurting delivery. They have lots of demand, but they can't deliver. And then Square gave upbeat guidance. They beat top and bottom. So lots of stuff going on. Do me a favor. I need some selfies. I have a 4-foot by 3-foot corkboard right there in my lobby where I want to post all the book selfies, your cards that you're getting. These are the 500 cards. You want to send me a message how one rental at a time is helping you, send me that. Tag me on Instagram, DM me on Instagram. I want to fill up that corkboard. It's got probably 80% left, so we got lots of room for you. Send me some selfies. Tell me what's going on in your world. And of course, have a wonderful, wonderful day. Lastly, I will not be doing my live stream tomorrow morning on Saturday at 8 a.m., nor my student one at 9 a.m. I will be sitting with my accountant going through 2021. Yeah, tomorrow's a long day. I almost feel like I go back and give my report card. I've been going to this accountant for 25 years, I think. And it always feels like I'm going to my dad. Going, here's my report card. Here's how I did. It's a weird feeling. But last year was a good year. I don't know. Maybe get a B+. Should have bought more. I should have kept more last year. That was the big mistake. We flipped 6 homes last year. I should have kept them all. Dumb. Should have kept them all. I didn't need to sell. They were great rentals. Damn it. Should have kept them. Anyways, take care of yourself. I digress. Michael Zuber, Daily Financial News. Like, subscribe, comment, become part of the channel. Bye-bye.